Am I live yet? Oh, now I'm live. What's up, every morning? Good morning. So we have a crazy, busy, packed week. I'm going to go over it slowly so that everybody can follow along and know what their expectations are. Okay, so tomorrow morning, we're going to go live at 8:25 a.m. because CPI numbers come out at 8:30 a.m. If you're with us on our Discord, which the link should be below, you're more than welcome to join Romeo on the live stream at 9:15 a.m. So again, this week, CPI tomorrow morning, 8:30. Major effect on the market. I will talk about my CPI expectations later today. Okay. Next, we have the FOMO or the Fed news coming out with interest rates hiking on Wednesday. That's not it, though. On Friday, we have quad witching. So everybody remembers how awful quad witching can be. That's coming up on Friday. So this is going to be a pretty volatile week. So people that are out there saying, yeah, the market's going to rip this week every freaking day. No, the market's going to drop this week every freaking day. No, it's going to be highly volatile, which is great for us day traders. When we're looking for the bottom and we're looking for a spike and a quick profit, 15 minutes in, out, 40, 50, 60%. That's what we're looking for. So I'm going to ask everybody, please be patient leading into Friday, right? I mentioned light volume all throughout the day. The market's going up, I'm mentioning volumes at 43 million on the SPY. I don't remember. It was like early afternoon. I was saying extremely light. Be cautious. My options. I went out till next week on my puts. What happened late in the day? Huge market drop. Volume on the SPY went from 43 million, closed the day at 82 million. So literally, there was half the day's volume in the last hour of trading the market. So what does that tell me? Well, it tells me big money was looking to exit the market before the weekend. So was there anything expected this weekend? No. So what's on tap? Anything changed since Friday to today? No, not really. So what's everybody waiting for? CPI tomorrow morning. So the fact that the market might be pumping, I've got CNBC on in the corner, so I'll slightly look over there just to take a look at futures every now and again. But the fact that the market was pumping like, I don't know, Dow was up 80 points, NASDAQ up 60 points. I get it. The Friday sell-off was pretty intense end of day. But big money tells me it's going lower. So then we can look at the ranges on the SPY, which I will get to, but I'm not done. All right, next, let's talk about COVID concerns, okay? Because no one's really mentioning COVID concerns. COVID is spiking in China ridiculously. It's actually going through Europe as well. Not to mention we have VSR, COVID, and the flu going through the US. So people aren't really mentioning it. The news isn't bringing it to the forefront, but it's happening. Next, patience. Keyword of the day, keyword of the week, because entry point is so important. We could speak about Friday. The market went up in the morning, early afternoon. Did I trade yet? No. When I finally entered into my put contracts, it was great because my entry was so good. So I wasn't really down. I was down 1%, 2% at worst. So that's why patience is so important. And I mentioned in a couple of different postings, maybe that's why some of you are here on Moomoo or Webull or even Twitter. I mentioned the most important times of the day to trade. So I'm going to go over my clock, where it's all Eastern Standard Time, right? The market opens at 9:30. Understand, institutions, big money, they like to trade within the first 15 minutes of the day and the last 15 minutes of the day. That's where the majority of the volume comes from, okay? So best times to trade. What we usually see, let's give a down day in the market. So the market starts off bear, right? Get a little spike, then you get a dip. Then there's generally a reversal. So no matter where the market is trending at 10:15 a.m., there tends to be a reversal. Meaning, if the market looks like it's going up and strong, there'll be a reversal at 10:15, and then you'll be like, oh, questioning myself. No, it's generally a fake out. So the 10:15, I call it a fake out. I also say around 11:20, we see a similar type fake out. All right. So say the market is going strong again, there'll be a fake out and then it'll rebound and you'll see the strength. Again, you have to base it on what the market is doing in the first hour to understand which direction the fake out could potentially be in. Now, me, as far as investing, I mentioned patience, but I like to invest sometime between 11:20 and 11:50 a.m. Why? Because if the market is actually having a strong day, that's generally, we'll see the top around that time before there's somewhat of a reversal. On Friday, it happened a little later in the day, which is my next time. 2:20 to 2:30 p.m. So it doesn't happen at like 11:20 to 11:50 every morning. But it does happen, I would say, a third of the time. A third of the time between 11:20 and 11:50, the market's either at the worst or at the best. So those are times that I focus on because I say, okay, if the market's strong, and I don't buy that it's strong because we have CPI numbers and Fed coming out later this week, and the market's at its best at 11:20 or 11:30, then I'm going to start grabbing some put contracts up there because that works within my time frame. Okay. Similarly, if the market was strong and it makes it past 11:30 and we make it all the way to 2 o'clock or 2:30, boom, there you go. My example for Friday. So these examples work about 30% of the time each. When you add them together and you can figure out the right time frame of the day, you're going to be profitable, whether you're playing calls, puts, whether the market's bullish or bearish. So pay attention again to the times, 9:30 to 9:45. I'm not trading, but that's where a good percentage of the volume is. End of day, good percentage of volume. Friday, in the last 1 hour of trading, we had 40 million on the SPY, which was half the volume. So again, those are what I pay attention to. We'll talk about PPI last week came in a little hot, right? That's why the market took a bit of a dump. So what do we expect from CPI? Well, first, let's look at PPI in China. It came in over expectations. Japan, geez, they missed. Numbers came in hot there as well. So what am I assuming? Our PPI numbers came in 1%, 1/10 of 1% over last week. So I'm going to assume the same is going to be true with CPI, which is tomorrow morning. Again, be live at 8:25, 5 minutes earlier, so we can do the lead in, and then we're all going to watch the CPI breakdown together, and we can talk about what the expectations, because the market is here to fool you. Psychology, everybody that was here with me on Friday, I was watching the numbers and I was like, holy shit, that PPI is hot. The market should hate that. The market was up 200 points pre-market, went from 200 up to 200 down. And then what do? They pump the market off light volume. Now let's explain why they pump the market. And when I say they, I mean big money. But big money will pump the market because they're stuck in bullish positions. They're stuck in bullish positions. PPI came out a little hotter. Market was going down. What are they going to do? Pump the market. So they're basically taking a piece of shit and they're making it look like gold, and then they're selling it, and then the market dumps end of day. So we could talk about the SPY ranges, okay? SPY ranges for Wednesday, 395 on the top, 390, 197 on the bottom, right? 3-point day, inside day, 395 rejected, which I've mentioned a number of times, right? Thursday, 397.56 on the high. So 398 rejected, right? Because that's a major supply level. On the bottom side, 393.27 was the low on the day. So understand, where did we close on Friday? 393.27. So on Friday, we closed at Thursday's low. What does that tell me? Even though the market's up 76 points pre-market, I'm still a bear. I'm still a bear. I mean, I wish I sold my bearish positions and I would re-enter on market open. But dude, you don't trade on market open. There are some exceptions. If I sell a contract that I really like that expires this Friday, say I sell it for $1.86, right? Friday, right before close, I'm out at $186. Knowing that I want to re-enter less than 186. I once did that with my Apple puts when Apple was 155, then it tanked. But the example basically is I paid $1. I got out, I took profit, and I'm looking to buy in cheaper. If I sold it at $1.84 and I can get back in without even knowing how the market's going to open this morning, the same contracts at $1.50, I just saved 21%. So again, I don't like to trade at 9:30, but if I sell something on Friday, I like the position and I get a discount at market open because I put in my order, I'll take the 21%. So you have to trade within your own strategy. Trade within, if you're holding contracts and they're worth $10 each and you could sell them on Friday at 10 and you think you could buy them back on Monday anytime at $8, you're saving 20%. Okay, so SPY ranges, again, Friday was again 397.62. So Thursday, 397.56, 397.62. So again, we hit around the same high on Thursday and Friday. If I was going to look for the market to reject, say the market was strong this morning, I wouldn't understand why, but say we break through 395, I would expect it to reject the same level, 397.62. But I don't expect we're going to get there. I think 395 will be a good rejection. Let's see where the SPY is pre-market, 394.61. So if it was going to reject 395, it'd be a narrow day. Now, what I'd be looking for upon market open is a SPY to be bought up at open because that's what they like to do. So I can see it going to 395, maybe 40 or 50 before it rejects. So me today, my strategy, I'm going to take the first 1 hour and a half away from trading. My options expire on Friday. So I'm going to say, okay, I'm not believing. I know CPI is coming out Tuesday. I know the Fed is speaking on Wednesday. I know there should be uncertainty. And I know big money is not throwing a lot into the market before they know the CPI numbers. So I know the market, if it rips, it's ripping on low volume and it could fall 2 times as fast. So that's one thing I'm looking at. Next, oil. Oil is down 11% over the last week. It is down 6 straight sessions. It fell under $70 per barrel. It's now up over 71 and change. But again, it fell 11% last week. If you look at the outflow on the XLE, the oil ETF, it's pretty substantial. However, some of these oil stocks haven't followed suit, okay? There's only been some selling. In fact, there's some energy companies that are ripping this morning. All right. So that makes me a little weary. Oh, I always talk about manipulation in the market. So I've got a great example for manipulation in the market. We all know the Gap stores, right? Gap stores, Old Navy, Gap. It's all over the place, right? Gap store is extremely beat up. They're not run very well. Kids don't really like the Gap all that much. I mean, back 34 years ago, we were all shopping at the Gap. Everybody, the Gap was the coolest store. Oh, they got new tees. They got new... Gap sucks now. Gap has the same shit from 35 years ago. They just brand new. That's it. So what happens on Friday? Manipulation, as I mentioned. Market's going down the last hour of trading, right? The SPY is getting wrecked. There's tons of outflow in the market. However, Gap, GPS, you should look at it. From 2 p.m. till about 4 p.m., volume picked up. And then what happens Monday morning, this morning, pre-market, you've got a couple analysts raising their price target on the Gap. What happens to the Gap pre-market? I think it's up 3.5 to 4%. So let me see where it's at right now, just because I can follow through. Gap stores, here we go. Okay, 3.67%. It was as high as another 20 cents. So as high as 4.5%. But that's my point. That's manipulation right there. They enter into a position, okay, if you look at Friday's chart, and volume started spiking around actually 3:29 p.m. So for the last 30 minutes of the day, they were buying the Gap stock at $13.90. And then what happens this morning after they come up with their analyst upgrade? Well, the stock's up 3.67%. What could they easily do? Well, let's say it's up 4.5%. It's sometime this morning because they're pumping the market. They can exit out of their position. What happens? They just made 4.5% overnight in one day. Understand that certain funds on Wall Street are just looking to make 11 or 12% all year. So if you can snag 4 to 4.5% in one trade, you're damn happy. You're like, oh, there they go. We screwed them again. Manipulation at its finest. Okay. So I mentioned that. All right, let's get into CPI for tomorrow. So again, expectations are the last reading came in at 7.7%. The expected reading for tomorrow is 7.4%. Okay. I happen to think we're going to come in at 7.5%, a little hot. Would not surprise me if we came in at 7.6%. So I'm looking at 7.5, 7.6%. I'm looking for the market to dump. Now, understand the opposite would be true. Say we come in right in line at 7.4 or 7.3%. Okay. The market will likely rip, and then Powell will speak on Wednesday and the market could tank. So there is going to be a ton of volatility. So going into the close today, I will probably diversify my positions. Meaning, although I don't think the market will rip tomorrow off CPI numbers, I might get some way out of the money calls. I might buy them cheaply so I can get a massive return. If I'm wrong about my other positions, at least I'll have a winning trade there to offset that. And then if I'm right about my positions that I'm holding, my put contracts that I'm holding, well, then I'll lose a minimal amount on trading call contracts that were way out of the money that I got extremely cheap. So that's my strategy going into CPI. Again, everybody's welcome to join me 8:30 tomorrow morning. If you're with us now, you could join our Discord, soc-platform.com. That's our Discord. Verify yourself. You get 7 days free. Why is that important? Because Romeo is doing a live stream at 9:15 a.m. So anybody that's looking to trade at the market open, he leads us into the market open. Okay, here's what I'm looking at. Here's what the thing is. Here's the candle. Within a minute, he's already figured out how he wants to play the first 15 minutes, which we know will be volatile. Okay, so I don't like to trade that crazy volatility because sometimes I get stuck in bad positions. But if you're looking to get in and out of a trade, shit, we've got the best platform for that because right at open, we lead you into that. All right, so I mentioned my best entry times. I mentioned COVID spiking. I mentioned the pump on Friday I thought was bullshit because volume was so light. I mentioned PPI last week, came in hot that we spoke about. Oil's been down 6 straight days. CPI is estimated at 7.4, down from 7.7 last month. Oh, let me share something great. Okay, so let me share Discord real quick since I've been talking about it. And let me share something else on Discord. I'll go to my room because these are some posts that I made. I just want to clarify what I'm seeing and how. Okay, so here we go. Best post. Let's just blow it up so you all can hopefully see it. Make sure it's everybody. Okay, so it's not the largest, but you guys can see it. I'll blow it up a little larger. Okay, so here we go. Here is what happened days that we had CPI. January, market was a little green. February, off almost 2%, 0.5%, 30%. Very light trading. As you can see, these numbers are getting more intense. And when I say more intense, it's a bigger range. May, off 1.65%. June, almost off 3%. July, not much happened, right? August, it got pumped 2%. September, off 4%. October, up 2.5%. And November, we remember what happened last month. Shit was crazy, 5.5%. So understand the kind of day we could see in the market. Let's just use 2.5% as an example, okay? So we have the SPY sitting at 394. Let's just say it's at 394 tomorrow morning, okay? 2.5% on the SPY, and it's sitting at 394, which is basically 400. So 2.5% of 400 would be a 10-point move. So let's take it a little less. Let's say it's only 9-point move. So if we close today at 394, at 393, and it's a 2.5% downward move tomorrow, you're looking at 9 points from 380. You're looking at like 382 or something like that. And if we close at 382 tomorrow, what's likely to happen the next day? Probably another 1% or 0.5%, something like that. So you will have time to exit out of your positions. Okay, let's give the reverse scenario, okay? Let's say CPI comes in extremely weak tomorrow. It comes in at 7.2. We were expecting 7.4. Again, I don't believe that, but I'll give you an example so you know what will happen or what to expect. All right, so CPI comes in weak tomorrow. You go up 2.5% tomorrow. We close today at 394. Where are we going to be tomorrow morning? We'll be at 403, 404, and the rejection level 405. So your bull case scenario, some point tomorrow, again, bull case scenario, some point tomorrow, the SPY goes to $404. Okay, that's how I'm going to base my opposite position to cover my puts. I'll be taking $402 SPY calls probably. Okay, with that said, again, bear case scenario, lose 2.5% on the SPY. We closed at 394 today, lose 2.5%. That's 9 points. We see 383 on the SPY. Understand, if we break 389 on the SPY, that is a major down level. That is major support. It will just tell me we're going further down. Okay, so let's talk about the support levels for the SPY. You've got on the downside, 385. Not looking for that to get hit today. 385. Go up 4 points, 389. Another 3 points, 392 is the next level, okay? We found support there. 390, 197 on Wednesday. So 392 was supported. Next level up, 395. Okay, well, that's what rejected on Wednesday, 395, and we traded in between that range on Thursday and Friday until the late afternoon sell-off on Friday. Again, late afternoon sell-off on Friday, there was a hell of a lot of volume. All right, so let me go back to Discord and show you what I'm looking at as far as what goes on with the market. Okay, so I pull up my posting there. Yeah, I made an earlier posting just about the CPI numbers, what was happening. But let's go over to the money channel, okay? And the money channels for me is big money and how big money reacts. So I go here and I'll look at, these are the ones I typed out. So this is the net flow for Apple. Make sure everybody can see it with me. It's nice and big. I'll bring it up even larger. No, that just takes away my pretty face. Okay, so we'll go to the net flow for Apple. So what you can see on the green, okay, these are call premiums, meaning the amount of money you're paying to buy call options. Well, shit, that's going down. Should be going down because the stock, which is in white, is going down. The cost of puts seems to be going up. It's hesitating here, so I'm going to watch that. So Apple is more mixed. What do I have next from Apple? I've got Tesla. So let's look at Tesla. The price for calls always extremely high. The price for puts going up. Tesla still looks like it's facing a battle. I'm in some Tesla puts right now, out of the money puts, because that's what my small account wanted to afford. Limit the risk. But let's look at the market in general, okay? Here you go. Market net flow. So what are you seeing? The red line is peaking out. That's the cost or premium for puts. So you're seeing the bottom red, you're seeing the volume increase, you're seeing the number of put contracts increase, while the white, which is the price of the SPY, is going down, while the cost of premiums for calls is still sliding down. So if this continues, you're going to see this cost sliding down, the put premium going up, and the price literally going down. So that is why I'm still a short-term bear in the market, and I don't believe this. Then I'll look at the SPY. I just looked at the market. Now I'll look at the SPY. Okay, I'm seeing something very similar. Let's look at the green line first, the cost for your calls. It's not really bouncing up. If the market was going to go higher, I would see the green line going up and spiking a little, telling me, hey, the market's about to turn around. But I'm seeing the same thing for the SPY that I saw for the net flow of the market, meaning the cost for your puts is still extremely high. The price level is still extremely low. And again, we have CPI coming out tomorrow. Okay, and let's just go to the SPY levels, okay? Funny, I didn't do this search, but you can see the dark pool levels in the SPY. So let's just talk about dark pool levels first. Understand, more than 50% of the trades that occur in the market happen in the dark pool, meaning we don't know about it. So why is the dark pool used? It's used so that it doesn't really affect the ETF price or the stock price. Let's say you were going to buy 10 million shares of Apple. If you did it on the open market, shit, Apple would rip like 20 points higher because there's a lot of demand and not so much supply. In the dark pool, it's like when you're selling a house off market, okay? Not everybody can see it. Nobody knows that it's off market. It's like a secret. Shh, shh. But it's happening. There's a transaction, a buyer and a seller. Same thing in the dark pool. All right, there is a buyer and a seller. So let's look at the dark pool level again for the SPY. Let me just go. Here we go. 395.46. So that's telling me where it used to be 398, it's now gone down, meaning the excess supply is right at 395. Now we see another dark pool level, 392.87. Those could be bulls. Why could those be bulls? Because I mentioned 391.97 was the bottom on Wednesday, 393.27 Thursday, 393.25 Friday. So the fact that it's under there, that might be a buying level. So again, I see 395.46, 39.47 billion as a selling level. That's why I believe the market rejects when we get to that level. So you guys will say, shit, Matt, where do you find all this information? How is all this information available? It's on our Discord, which you could join for free for 7 days. You could try it out. We have instructions or directions on how to enter, these different commands. TR, you can say, look at the net flow, right? Then you could look at the flow sum, which tells you all of the contracts that are open and closed, puts and calls. Okay, so flow sum. Do it for any stock. DraftKings, Coins, Meta, Netflix, whatever it is. Then I also like to look at flow sum, net flow, the algo flow. The algo flow tells you where the algorithms tell you the stock price is going to go. If the algos are up here and the stock price is down here, there's bullish divergence, meaning they're probably going to meet somewhere higher. If there's bearish divergence, and again, bearish divergence tells you the algo is down here, stock price is up here, the stock price has to come down to meet the algorithm. They have to meet someplace in the middle. That's what happens. That's when people talk about like VWAP and stuff like that. I like to talk about that. I like to trade off that. It usually crosses over and then it usually rejects. So you can tell what the rejection levels are. All right. But those are same tools that Big Money uses. They're available on our Discord. It's the same tools that Unusual Whales breaks down for you. He'll do the search and he'll be like, okay, unusual activity on this or that. We also have golden sweeps, bullseyes, which are generally correct within 3 to 5 days. Bullseyes are basically telling you, here's what the algos are saying. Here's how the market's trading. Here's how you should be trading. And it says it's generally correct within 1 to 2 days. I like to give it 3 to 5 days. But these are just ways to use our tools that we provide to you guys. Okay, so again, Let's just look at the SPY range last week, 398 on the top, 392 on the bottom the entire week, right? 6-point range is very inside. Why is it inside? Because we have CPI numbers coming out tomorrow. So there's going to be hesitation. So anything you see in the market today, whether the market rips higher or rips lower, I'm a non-believer until I actually see the CPI numbers. What you're going to see today is you're going to see a lot of activity on people betting. So there's going to be wide swings today. So if the market's spiking, then expect to see just a really quick drop. If the market is dropping, expect to see a quick spike up, a quick rebound. So there's going to be potential for a lot of decent plays today. Understand, nothing goes straight up, nothing goes straight down. So me, today trading, for the week, I'm still holding my puts. But for the day trading, I'm going to look at the volume. As long as volume is light, it's telling me don't believe this bullshit because CPI is coming out tomorrow and then you have Fed on Wednesday. That's when we're going to see volume. Whatever volume we see in the SPY today, let's just say it's like 70 million. Let's say tomorrow we see 74 million. Don't be surprised on Wednesday when you see volume of 120 million. When you see volume that makes up all of Monday and all of Tuesday put together on Wednesday. And it might happen late in the day on Wednesday. The Fed's coming out and speaking at what, 2 p.m.? So 2 p.m., 2:30, sometime around there. You're going to see a ton of volume between 3 and 4 p.m. on Wednesday. So if you don't want to trade this weekend, you want to look for one trade, base your trade on the numbers tomorrow morning, CPI. Get the breakdown from me. If it's hot, you know what the Fed's going to do. If it's hot, the Fed still needs to act extremely strong and be hawkish. If it's cool and numbers are like surprise everybody and they're like, holy shit, things are getting better, soft landing, the Fed could do a pivot. Again, I don't see that, but it could potentially happen. All right, with that said, I'm heading over to Discord right now. Let me just see if we have any questions. Everybody's welcome to join us on Discord. Romeo's doing a live stream at 9:15. Other than that, let's have a killer day. Remember, execute your strategy. Let me leave you with this. Patience. My best trades are when I don't enter into a trade and I go, okay, I would have bought this option for $256. And then later in the day, I see it selling for $214. And I go, shit, that's 20% discount from what I was willing to pay if I rushed into the trade. Now that I showed patience and it's showing a bottom on the trade, I'm going to buy these same options for 20% less. That is what patience does for you. Makes you a better trader, makes you a smarter trader, makes you a more efficient trader. And that's why you're here. You're not here to be an active trader. I'll give you one analogy. Anybody can bet on a sports game. Anybody can go to a roulette table and bet on red or black without any knowledge. You could bet on the Giants or the Eagles yesterday without any knowledge. But imagine if you were waiting for the best time to enter yesterday. The Giants are down or the Eagles are up 24-0, and you're like, okay, I'll take the Giants and 30 points, whatever the spread was. Well, did the Giants lose by 30 points? Probably not. That's the same thing, showing patience. The market does this. Basketball games do this. Football games do this. But when you see the bottom and you say one team is up, let's say Tom Brady was down 35-0 yesterday, and you're getting 35 points plus Tampa Bay. Well, shit, he scored the next touchdown. He only lost by 28 points. You were getting like 35, 36, 37, whatever it is. Yes, you have to wait for the bottom. So please, if you like my analogy, make a comment below. Give a thumbs up. All the algorithms are used on YouTube. I don't do any marketing or anything like that. And again, everybody's welcome to join on Discord. See you guys soon. Have a wonderful trading day. Be smart.